Hi, what's up, Woody? Today I want to do a um, little discussion about marrying your setups. Not marrying your bag. I'm being specific about setups. Not marrying your bags. Not marrying your positions because those are things that I think those are obviously beginner mistakes that we have all made, and I think those are something that we can kind of somewhat easily wrap our heads around. Just don't do it. But I think setups are a little bit more difficult, especially when you are either a beginning trader or not trading too many setups. When you find a setup and you pick up a trade, you really, really want it to work out, and you can potentially get married to those setups. And sometimes it's just not the move. So what I want to do here is go through a setup that we have on the 4 hour chart that I was talking about yesterday, and then I'm also going to look at it on the 1 hour chart, and I'm going to explain why in a second. But basically, the idea was we had uh, we've been talking about this range, this channel for a minute, right? And we got a we kind of thought, you know what, since we're in chart replay mode, let's even replay it back to here. Um, we kind of thought possibly one push up, two push up, three push up, right? And then we got this pump here, strong candle, nice hold. This is where we entered as well, but whatever. Um, and this is also where I exited. The trade I took was from 42, I think 42.3 or something, and I got it at 43K. And then overnight it continued to rally higher, right? Overnight it had this crazy pump up higher. But anyway, there was a thought that potentially, we've had one, two, three pushes up. We might get a double top and then, reject back down. In fact, we did reject down to the bottom of the channel, but then we pumped up again. And then this was another setup that I took where we had consolidation at the high and then a small inside bar. And I had a great entry on this because my entry was very low on the bar, and the stop right underneath that bar. We had a nice little pump, but it rejected. Then we had this inside bar. This was enough selling pressure to suggest that maybe we're gonna dump down, but at the same time we're still at the top of this flagpole, so still high probability of going up anyway. Nice stop out here and then a pump. Okay, and then up to 45K. So this is where we're at now, right? We had a strong pump up to 45K. First attempt to reverse kind of failed, and then we got this second attempt to reverse. And this is kind of what we were talking about yesterday, is if we get this close on this, this is also the daily open 4 hour. If we get this type of close where we have one push down, let's do it like this, where we get one push down here, second push down here, and we're able to hold the level here. Or even if we're not able to hold the level, even if we dump through the level, but we get a nice close back up here, I'm going to take the long here. So this is the setup for the entry, and I took it on the 1 hour chart. And the next bar is actually a nice fill bar. Now, if we notice, this bar is technically not the setup bar, right? Because this is just a buyback, but technically we haven't taken a new high. So this is actually your setup bar, and your entry bar is one tick above this level. And the bar that we're expecting on this setup is we've had one push down, two push down. We're expecting the subsequent bar to go straight up. So I actually bought the top of this bar. My entry was 475 or something like that, and my profit target was in this level, like 40, just 1% about thereabouts. That was the look that I was going for. I was expecting we'll probably get a pump through here. I think I put 5/6 of my position to close at this level, and then I was going to ride 1/6 above in case we continue to push higher and higher, instead of possibly like I was expecting is maybe rejection. Well, I was expecting rejection because there's clear selling pressure up here, and this was a potential final flag, and I don't want to get caught holding the bag if we dump through these levels and back down into this range or this range. Okay, so let's clear off the chart. This is the setup we're talking about, and now let's take a look at it on the 1 hour chart. And unfortunately you can't do bar replay on two charts at once, so I'm going to close out the bar replay here. You'll be able to see, unfortunately, the result there. And I'm going to go back to the bar replay on this chart, which is, I believe this is the candle, right? So this candle opens at 21. So we are here at 19 right now. Let's push one up ahead. So let's take a look at this really quickly. We have the same, right? This was that region. Um, we're seeing some sort of buying pressure in this region here, right? Based on this wick and then this wick as well. So kind of expecting, one leg down, two legs down, buying pressure in the region, holding the lows, and then, this is possibly a breakout pullback that we might get a pump on. Now, why was I not bullish necessarily for a break through the high? Because of how strong, I wish it wouldn't come up there. Because of how strong this dump is, right? This dump is quite sharp. And taking us right back to the origin, basically. That's okay. It's nice to get a decent breakout pullback. But yeah, the strength of this is just so sharp that I really was more so expecting like a wick kind of thing. And I was like, yeah, I'm just going to try and get out on the wick. That was kind of the setup. Majority of my position, I'm going to get out on the wick. And then if it ends up being like a wick and then we continue to see sustain, then I'll hold the remainder of the position. But yes, this was the setup. So this is the 20 close. So pretty strong, right? Same type of thing that we're looking for. We want the, where are my arrows? This is your high one, first pullback. Doesn't enter on the next bar, and we end up getting this high here. If we actually take a look at it on the 15, and I was drawing this yesterday, so it might be in a video from yesterday, but yeah, exactly this high one that we've drawn here. We get this rejection on this candle and then pump back up, and then what we ended up getting was kind of like a wedge of sorts. Really kind of here. It's a lot clearer, I guess. I mean, it was so clear as day yesterday. It was on the 5-minute chart that it was clear as day. Yeah, something like this. And then we had 3 pushes up. We tried to take an entry in this area, and this was kind of the last. This was the last opportunity to get out. Wedge entry was not good. We took an entry on a long. I'm sorry, is what I should say. And it didn't work out. This was a pretty mediocre decision, just because again, this candle is just so sharp and so strong that it doesn't really make sense to take this. But sometimes it happens that like you just go like this, and we just get a pump to the thing. So it wasn't the most unreasonable entry, but yeah, you just kind of have to keep an eye on it on lower time frames and see how that ends up going. Okay, but yeah, so on the 15-minute chart, we had this wedge set up, and then we kind of ended up getting the same kind of thing happening here. Kind of another wedge in this area, but the difference is at this time we're looking, if you're looking at the, is this the 15-minute chart? This is the 15-minute chart, right? This whole region here is, even though it is wedge-like activity, it's very strong. It's just nothing but green candles, green candle, green candle, green candle, green candle. All of these candles. How many other candles this is, let's see, 12 bars. And of those 12 bars, really only a couple red bars. So for the most part, it is strong. I'm going to clear off this stuff now, and we'll just redraw the important details of this region that we're trying to reject. Get our pullback off of, and we had a sharp pullback here, right? Like as soon as we dipped into this 44, like low 44K area, just slightly under 44K, we immediately bounced back pretty strong, like a percent, right? So that was a pretty good start. Technically, this is the high one, but you don't get a high two because we don't break the low. So really, this is just a high one pullback. But this is kind of your on that pullback, this is your high one, horrible high one, right? And then take a new low, and then this is kind of your high two, which again is not a good high two because it's a doji, so you can call this the high two. So This is right where we end up taking the entry right above this. I traded on a different exchange, so I didn't get this 44.4. I got 44.475. But yes, that's basically that is essentially the setup that we're getting. So like I said, you still kind of have a little bit of a wedge activity, but this is just it. You get a great close on the 4 hour. Um, let's let's take that one out. Yeah, you get this great close on the 4 hour, and you just kind of have to take the trade here. And on the 1 hour, it makes a lot of sense too because you have this pullback. So you take this entry here, and then pretty safe to put the stop underneath like here. Um, Especially once this closes as a nice green candle. You can put the stop all the way down here, but the thing that we don't like about putting the stop all the way down there is this is buying pressure, yes, but these wicks are we have two wicks here already. So we already have one push down and the second push down. So if we're going to get a third push down, there's a much higher likelihood that your wick gets taken out. It's possible that we get kind of like this and then we still close up here, but your level here gets taken, possibly even this level gets taken. So not as big a fan of putting the stop down there. We already have our two pushes down and we are already expecting that we're going to just be going vertical now, right? So that's the reason why we don't take that stop. We take the stop on the 1 hour chart, even though the setup is kind of on the 4 hour chart. The setup is kind of on the 4 hour chart. It's kind of on the 1 hour chart. And then we get this nice continued pump candle. So now you're really feeling pretty good about this stop. Okay, let's skip ahead a little bit now because this is all looking good. This is all looking good. And this candle closes at 1 a.m. So this is that candle close. And when we see this, in fact, I'm just going to, we're just going to go back to one thing here and we're going to put this on the 1 hour chart just so that it's a little bit easier to see. And we're going to go back to bar replay. This was our entry candle, right? Or this is our setup candle. This is our entry candle. We're in the trade now. And then we get this kind of flaggy formation. When you see this, we're hoping, yes, this is looking great. And we're getting a close now. This is the end of the candle close. The candle close on the 4 hour is yet another green soldier. So we're kind of expecting we're just going to go straight up from here now, right? I think our target was something like this. We're just going to go straight up from here now. Not unreasonable to think. This is the candle, though, that we end up getting. Now, when you get this candle, it's looking like, okay, possibly, if we break above this, it's still going to be a good look. But what if we break below this? If we break below this, now we're starting to have this sort of flagging in this region. Oops. No, this is not what I'm wanting. I'm wanting the channel. We're starting to get this kind of flagging in this region. And then we broke above the flag. I'm going to delete this now. Just assume, just know that we know where we entered. I'm going to put array instead. This was our entry, right? And then this was our stop underneath here. Just as one super strong candle. When we get this, we think it's a possibility that now we've flagged here and we've had this really weak breakout above the flag. And if we break below it, our stop is no longer safe. And what ends up happening is we don't quite break below it. I guess we do kind of break below it, but we get this little doji. This is exactly the scenario now that I'm here to talk about. We're starting to get this flaggy behavior, and this flag could continue until we get a convicted candle, that comes down through our entry. We're not feeling particularly worried, but this isn't the best look, right? Now this next candle comes through. Now what are you supposed to do? This is exactly what I want to talk about when I say marrying your setups. We have what seems to be a pretty great setup here. On the 4 hour chart, technically it's not the best setup in the world because we just kind of took this level and then we pumped up here, but now we've already broken below this entry bar. If this is supposed to be the entry bar on the 4 hour chart, we've already broken below that. Now our 1 hour stop is still reasonably safe at this time, we're thinking, but what are we expecting here? Like we're expecting to again we had a higher low here, we got the higher low here, and then if we pump up, are we still feeling good? Or if we pump up, are we thinking this might be it, and then we come back down and take out our stop? Because that's very reasonable too, and that would be a double top bear flag here, right? Off of, again, super sharp momentum move down here. So this is kind of the thing of don't really get too married to your setup. It's reasonable to if we do get a pop up here, take some profit so that we can move our average entry price closer to our stop so that it's almost effectively break even. That's something that you can do. But if you've taken the position with the expectation that all of this, we're going to try and ride majority of this to our profit target, then you're going to start to feel like psychologically it doesn't feel good about, okay, I'm taking half of my position off now and I'm only riding half of the position on this great setup. You're still thinking this was great setup, right? So this is kind of one of the psychological pitfalls that we kind of run into when we have these situations of having great setups. And you have to really be careful to not marry these setups because you're now expecting, when we have this and you see this candle and you're now expecting, you know what, our trade isn't safe. This might not work out for us. We still think, of course, this might work out for us. We might get another bounce here and then go higher, which is not at all unreasonable. But at this point, what are we supposed to do? On the 4-hour chart, something that you can do if you really think that this is a possibility that we're going to kind of go like this, what you can do is you can move your stop to being below this level. But like we said before, this level isn't really safe, and especially if we're looking at this as a potential double top bear flag, this is really not safe. It's very reasonable to take this stop out and then either continue lower or do the same thing, pump back higher. So it doesn't make sense to move the stop lower. You do want to keep the same stop. What do? Do you want to move it underneath this bar? You can, to put a little $50 barrier in, but again, the same kind of thing. None of these stops are necessarily safe when we start to see this this bar forming off of this potential double top bear flag. And then especially when you get this bar, now this is nasty. You're already underwater. Your stop is absolutely unsafe. And now you're really feeling like, well, when I saw this flag, when I saw this potential breakout of the flag and then potential rolling over off of the double top bear flag, listen again when I'm saying flag. This is the flag I'm talking about. This bull flag here that we're having momentum upwards, that a little bit is trying to be stopped by the strength of this candle, but it gets swallowed up on the next candle, and then we get this tiny pop out that gets immediately swallowed back up by sellers. This is the flag that we're talking about. This flag just so happens to, on a higher time frame, make a double top bear flag, and now we're running on that double top bear flag. So I think basically what I'm trying to say is when you're in a situation like this, I think it's really easy to say, especially when you have a good entry. Like what if you got in on this candle, right? Instead of waiting for this candle to close, if you just see this and you say this is pretty strong, we break above it, and I'm going to enter at the open of the next candle. If you enter at the open of this candle, your stop is initially down here, and then you move the stop up here. All of a sudden, your stop is effectively break even, right? Or maybe like up here or something like that. Even with the stop, or even with the entry above this candle and the stop underneath this candle, you're still having reasonably small risk here. And I think that's something that can really, those are the types of paper cuts that can really drain your account, thinking that, hey, my stop is really close. It's, not even 0.5% away. It's like 1/3% away. Let's just hold it because I think this is going to be a good trade. I think it's going to be a good trade. If you lose this, you have to make, if you lose 3 of these, you're losing 1 winning trade, right? If you're always trying to take 1% on your winning trades and you're willing to risk 1/3% on your losing trades, then if you do 3 of these, you're going to lose the whole thing. And if you did take the trade up here, and by the way, your trade up here, your stop was probably going to be, somewhere down here or even down here, whatever the case may be, you might have lost with those two trades alone. You might have lost your winnings on 1 winning trade. So we really don't want to be doing that. Sometimes it just makes sense. Just cut it. You start to see the warning signs. This candle, really also this candle that comes right back through your entry. You can close it on this candle saying, you know what, this is not good. Like we're now forming a sideways trading range. And because we pushed through the top of that trading range, let me put it on 15 minutes here, in fact. We built a sideways trading range here, right? with this flag. We broke above that trading range, and then we came back into that trading range. What's the thing that I'm always saying? When we come back into the trading range, we're going to try and take out the other side of the trading range. Our entry just so happens to be on the other side of the trading range. Now, because it's on the other side of the trading range, you hate to have to close your entry down. You hate to have to close your position down here because you're now selling the bottom of a trading range, which is something that we don't want to do. But when you see these warning signs on these high time frames, it makes sense to do that simply because the trade, if you remember, we're making a momentum play. So when we start to lose momentum and now we're no longer in a trend, we're starting to have sideways trading range activity. This is not the trade anymore. This is not the trade that you were in. You were not looking for, I'm buying the bottom of a trading range and I'm going to sell higher. You were buying a momentum play that just so happened to evolve into a trading range that just so happened to have your entry as the bottom of that trading range. But now if you're trading a trading range, you have to be taking your profits at the top of the trading range. And this is the top of the trading range. It's very small. It's very short, right? It's even less than your risk. So now if you're telling me that you're going to evolve your trade into a trading range trade, well, now your entry is here, your stop is all the way down here, and your target is right up here. You're not even getting a 1-to-1 risk to reward ratio. So this is a horrible trade that you're not going to be taking anyway. So now you're still saying I'm in a momentum trade, but the market is telling you otherwise. The market is telling you we're in a trading range. This is not a momentum trade. So these are the things that you have to consider. And when you think, oh, I'm taking a momentum trade, but the market is in a trading range, but if it continues to be a momentum trade, I have a great stop here. So I'm just going to hold my position overnight and let's see what it does in the morning. This is something that we need to work on. That's that psychological effect that we need to work on. I mean, this 4 a.m. you're probably already asleep at this point. You know, you might have gone to sleep. Like usually, if I'm doing these 4-hour trades or something like that, I'm gonna wait until the 1 a.m. candle opens here and see that, oh yeah, this was a great candle close on the 9 p.m. candle. You know, we're gonna have good. I'm expecting we're probably gonna get some good follow through, pushing up higher. You can even move your stop to being below this candle when it closes. Um, or you can keep it as it was on that 1-hour chart if you're playing that 1-hour chart. But as you can see now, this stop is really at risk here. As soon as it evolves into a trading range, which we know probably by this candle that we're possibly getting a trading range for real. Here you see that we're possibly evolving into a trading range, but it's looking like a bull flag and it's looking like we might have the momentum to break out higher. But then we get this rejection candle here, and now we're like, okay, this is kind of a trading range here. And then this bar is basically effectively an inside bar on the trading range. Now you're really like, yeah, this is kind of a trading range. So by this time you kind of know already that the trade that you've entered is not really going the way that you were seeing it to go. So when that happens, then I think a natural instinct is to keep the stop a little bit looser. We want to have a looser stop. You almost start to think, let me make the stop even looser or even looser or even looser than what I had already. Or dare I say it, put it all the way down here and put some buy orders in here. I don't know if that's really the right move on this type of situation, because now you're still only looking for 1% to the upside, but you're potentially willing to risk all the way down 2%. It's a low probability that 2% gets hit, but like we said, double top bear flag. There is a short setup in play. We need to be careful of short setups that are in play when we're looking for a long setup. We like to see short setups that are in play when we're in a long setup, because if those short setups get invalidated, that adds fuel to the fire of our long setup. But these are things to think about as you see short setups getting blown out. But right now we're in the situation where our long setup is getting blown out. And so we don't want to add fuel to the fire of the shorts. Now here we get the bounce right off of our thing. Let's assume that our stop is a little bit lower, because of course we are going to give it room, and a little bit of room just in case it's going to do something like this. So now how are you feeling? Now we're trying to bust it back up into the range, and it doesn't work out. Now your stop is hit, right? Even from here, I think it makes a lot more sense if we get an opportunity up here, that you probably should be shaving. If not taking profit, shaving at least, right? You don't have to get out entirely, but you should probably shave. And honestly, you probably should get out entirely because, like I said, you were looking for a momentum play and it evolved into a trading range. So this is exactly what we're talking about. Do not marry your setups. Just don't marry the setups. You get a good setup. It looked good. It evolved into a trading range. The setup is no longer good. So cut it. Just cut it and move on. Because what's going to happen if you don't? Let's say you say I'm just not going to think about this. I'm going to bed. My stop is my stop, and I'm going to see how it looks in the morning. Well, in the morning you've been stopped out, and now you need to look for another trade, right? In the morning you've been stopped out, and now you need to start looking for another trade. Or you're still in the same trade, but it's still a trading range trade. It's still not the type of trade, not the type of momentum trade that you want, and you're still in this no man's land of I don't really know what to do. As until I sell the position, I'm not booking I'm not technically booking a loss. But this is not looking like you want to book a win. This is not the setup where you're looking like you're going to book a win. So just cut it up here, or cut it here. Oops, why is it not drawing? Cut it here. Cut it wherever you want to cut it. Cut it the moment you see, hey, this isn't working out the way that I wanted to. I'm getting stopped up here. I'm in a channel, and I'm now in a horizontal trading range. This is not the momentum setup that I was looking for. I don't think the probability of us getting up to 44.8 is so high. Let me just cut it and look for another setup. And that way, you cut it, you don't lose money, and you look for another setup. Or you can wake up in the morning, you've lost money, and you're looking for another setup anyway. So it's the same situation. Just keep tabs on what the market is doing. You know, maybe you're getting opportunities like this, and you're going to be able to get another pump up to 44.800 at some point soon. I'm not expecting this current move to lead us to 44.800, but maybe if we get another bounce from here or something like that, maybe that one could be the one, and we keep slowly moving farther and farther away from this consolidation region, right? Like maybe we do something like this, and we flip the level, and then we get a pump higher. I mean, I think this is probably the most likely scenario, but the question is, do I want to wait through all of this, through this horizontal level with a stop that I don't know where to put it because I moved my stop down here, and now it's possible that that stop gets run before we go, or I move my stop down here? Why, instead of moving your stops down here, get the fuck out of the trade and look for entries down here. Sorry for cursing. Just get out of the trade and look for buys in this area. Try and fill bids in this area. I think that's the way to go. So don't marry your bags. Why did I make a 30-minute video on don't marry your setups? This is like the simplest concept. You don't have to watch this whole video to understand what I'm saying, but I guess you now have to. Sorry.